Good day traders, welcome to the Forex Board Trading Academy. Today we are looking at the pound versus the Canadian dollar on the weekly time frame. So this is the long-term price perspective that will be discussed in this video. And before we get started, I would like to remind you that information in this video is for educational purpose only, should not be considered as a financial advice. Don't forget to subscribe to our channel to follow the videos we do every single day, and of course smash that notification bell to always stay up to date. What we have on the pound Canadian dollar weekly chart, this is clearly a big huge range trading which has started back in 2016 after price had this sharp decline. It has reached the bottom at 157.22, and since then we can see that there was the support area formed at 158.80 and the resistance formed near 179.21, which makes it a 2000 pip wide range. So very big range trading, very wide. And what we can see is that the price starting to show bullish sign, and perhaps we will see the return of the price to this key supply demand area. So what are the facts to support this? First off, we have the downtrend trend line which has been broken. So there was this breakout suggesting that the trend is turning bullish. Nonetheless, we didn't break the previously made high. So we cannot say with confidence that this is the bullish trend, and therefore we cannot expect new higher highs to be produced at this time. But what we can expect is price to at least retest the resistance area. Another factor is the rejection of the 50 exponential moving average, which is happening this week. And also what we have is the bounce of the trend line after the breakout price consolidated and rejected the trend line back in September. Also, we have a simple uptrend trend line and price nearly tested it. And we can see there is a big green candle starting to form, which could continue and eventually price will head north. So what is the potential key resistance level? As you can see on the chart, it is 179.30. Well, let's go into that. We have 3 Fibonacci levels confirming this resistance. The first one was applied to the last wave up when the price topped out back in 2015, and we have 88.6 Fips as you can see here. The second Fips was applied to the last wave down where the moving average was rejected, and what we can see is 61.8 Fips at this level. And finally, I have used this last correction where price rejected the trend line, and we see that 127.2 also corresponds to this price area. It is more or less at the same spot, plus minus 20 pips, but this makes it not a level but an area, resistance area. Besides, back in 2014 we had rejected the 50 exponential moving average, and this is the point of rejection. Yet another confirmation that this could be a strong supply zone in the future. Maybe if price will break above with confidence, it will confirm a long-term bullish momentum. Currently, as long as we hold this resistance area, it should be range trading continuation. So what I do expect, if we take the current price and calculate it up to the resistance, this makes it 711 pips, which could take about 4 to 8 weeks. Maybe 4 weeks will be enough, maybe even 2 weeks if the price will be going fast, like we had the big green candle here. It's unlikely that we'll have an extreme fast growth, so I would give it a 4-week move to the upside. So this is what I do expect from the pound Canadian. This is the weekly chart, guys. So yes, it's a long-term view on this currency pair. And you already have noted that we have so many pound pairs. Let's go to them, because I think this is the pound that will be driving the GBPCAD. And let's start with the pound Australian dollar currency pair, where we are still holding this support. I mean, the daily was holding, so we still expect a big move to the upside. Could be also fast based on Fibonacci cycles. We should be there by the end of the month, which means it's about 2 to 3 weeks. Same could be for the pound Canadian dollar, 2 or 3 or 4 weeks of the uptrend. So still holding the support, still expecting an uptrend. Pound versus the dollar, also an uptrend, expecting continuation towards one of the resistance levels. Let's not forget that this is the resistance already because it's potential double top, not confirmed, but still we need to pay attention to the rejections here. But if there will be fast breakout to the upside, then it will most likely continue. And here from the current price, we have the potential upside move of 250 pips. Pound Swiss franc, today is a very bullish candle. We did hold the support area, which is very good. So I do expect the price to continue rising. On this chart, we have a potential target 500 pips away. So also a big move that I do expect on the pound Swiss franc. Pound New Zealand dollar, also expecting a big move, although here is the nearest key resistance located 255 pips away. Most likely will get broken, but who knows, maybe in fact it will be the final, because it corresponds to the pound where we expect the same amount of pips to go up. So maybe this will be the final target, let's see. But now we still hold the support. There was spikes, and as long as the price is above there, there is no 1 hour break and close below this low, it should remain bullish with the accelerating uptrend. Pound Japanese yen, we had the correction also expected, so now starting to go up. You can see multiple pound pairs are giving a big daily green candles, which looks pretty bullish and continuation of the long-term uptrends on the pound pairs. Same on the pound Japanese yen. So here also expecting an uptrend continuation pair. So also could be taking about 4 weeks for the price to get towards that level that we expect, 144 approximately. And this makes it about 380 pips on the pound Japanese yen. And the last pound pair we had is the Euro GBP. And as you can see, the candle is really red. It is getting bearish. The target here is not that far away. It's actually 100 more pips, but perhaps we will go lower. Nonetheless, we should be watching this support at 0.8900 psychological level corresponding to FIBs and trendline crossings. So this is the final downside target for the Euro pound. We done all the pound pairs. Let's move on to other ones that we had. Australian versus the dollar. Price continues without any correction. So it's a long-term bullish trend. Still would expect correction. But guys, this is only for buying opportunities in my view. If there will be a sharp correction, it should be considered as a buying if there will be a strong pullback. I mean, small pullbacks probably not as much of an interest, but big pullback, if there will be one, we will be monitoring it. The next is the euro dollar. We're rejecting the trend line, so I do expect the correction down, then continuation of the uptrend, unless we break, guys, above this resistance. So currently still rejecting the trend line, and maybe there will be sluggish decline on the daily time frame, which will take also 2 weeks before any price will continue going up. So for now, I think the correction is likely to continue. Canadian Japanese yen, guys, I do expect strong pullback still, disregarding that there was the break above the trend line, because we're still holding this resistance. And in fact, it looks like a double top, clean rejection. It's not confirmed that, but still, I think the confirmation could be if there will be a break below the trend line. So that could trigger this corrective move down. Let's watch when and if that occurs, then we will see this strong pullback to the downside. But overall, I do think it's a long-term uptrend. At the same time, I want to see the corrective move to see the better price for entries. If we look from other perspective as well, we can spot that there is a strong resistance area, previous support, now resistance. Extremely strong supply zone. We must consider that, which should result in the correction or even reversal. I'm not sure, but in order to continue uptrend, we need to break above this resistance. So far, it is under heavy selling pressure from what it seems. Canadian Swiss franc, it also looks bullish, but just considering that there could be this corrective move to the downside, well, Canadian Swiss franc along with the Canadian Japanese yen could be going down. And guys, we just had analysis for the pound Canadian, which suggests that the Canadian dollar could be weak. So here is pretty dangerous to hold in my view, because there is a risk that the price might be declining, and still maybe it will go up, but I think it's a little bit too dangerous. So let's watch it, but careful. If there will be, I think there will be this downside move where we basically will attempt to break below this low and only then move up. I think this is something that should be expected. So watch the potential correction to the downside. I will also monitor and will update you tomorrow as to what is happening. New Zealand dollar, we're expecting the downside correction. You can see that the price is rejecting the resistance area once again, so maybe we will start moving down. Still a valid analysis as long as this resistance holds. If it's broken, we will see an uptrend. So here expecting downside correction. So that's it. These are all the analysis we already had previously, and with the new pound Canadian dollar, I do hope that you liked it. And in fact, if you did, don't hesitate to click the like and subscribe to our channel not to miss any of the videos that we do every single day: market analysis, educational videos, and live trade examples. Thank you all for watching. Till tomorrow, and profits to you.